everybody, this is Pat Walker, Mission Winners. I'm making a training coaching video here for everyone on a subject that will help you. In fact, that's all we try to do is help. We're here for a limited amount of time. Let's help people. There's a lot of great books out there. Bill O'Neill's book, How to Make Money in Stocks. Mark Minervini's book, wonderful book. Jack Schwager's book, Marco Wizards, great book. And there's a score of others. This is a great book. Lessons from John Boik. See that? This is a great book. I encourage you to buy this book. But I'll take it a step further. I encourage you to study it, to pick up some traits from some tactics of past great winners, investors, and how they did it. I'm going to go through here just a couple of these and tell you. He's got Jesse Livermore in this book, Bernard Baruch, Gerald Loeb, Nicholas Darvas, Bill O'Neill. I mean, these were the movers and the shakers years ago. And by the way, do I mark up books? Yeah, I do. Yes, I do. So we're going to go through here and just share a few pointers with you that will help you in your quest to be better. Jesse Livermore, check this out. By the way, you see this? I do mark it up. He talked about short-term trading, Jesse Livermore. It was from this experience that he learned how difficult very short-term trading is going to be on the big board. Stocks, the kinds of stocks that we do. He had to learn to adapt to different trading strategies in that environment. Again, Jesse Livermore, how difficult it is to day trade. That's something to take into consideration, right? Other areas very important from Jesse Livermore. Emotional control. Controlling the psychological aspects will affect your trades. Emotional control. It's something we're really big on at Mission Winners. Simplicity. Simplicity leads to a calm mindset. A calm mindset leads to better decision making. I can't stress that enough. Another key point from Jesse Livermore. And again, this is a great book. Here we go. Oh yeah. And do I have it marked up? You tell me. I got scores of pages marked up. I don't read these books, and you shouldn't either, for leisure. They're like textbooks, college textbooks. They help us. Another key lesson, trading. That trading every day and or every week is a loser's game and cannot be done with much success. Trading every day is a loser's game. Think about that. We don't do that. We trade, we invest when it's right, and we leave it alone when it's not. Here's a profound statement for you. Buying at new highs after stocks had made a minor reaction or corrections and then breaking through those areas was an action called breaking through the line of least resistance. This is what we do. A stock can go up and then it pulls back and consolidates and then it pushes through those old highs on really heavy volume. That's a setup I've used for years, decades. It works. It works. I can't stress that enough. Another key point. Number of stocks he followed was small and manageable. Don't follow too many stocks. And again, this is Jesse Livermore. And I think he did all right. I'm going to continue on here. And again, yes, take a look at this. I really marked these books up, folks. These are study materials that will help you. And again, this is a good book from John Boik. Please know this, by the way. John Boik didn't contact me and ask me to do a video on his book. No, this is strictly an arm's length, objective analysis of a good book that I would encourage you to have in your library and study. Check this out. Leading stocks in leading and strong industries is where you want to concentrate on. Leading stocks in leading and strong industries is what you want to concentrate on. Avoid cheap stocks. This is all stuff from Jesse Livermore. Continue onwards. We're going to go to the next guy, Bernard Baruch. Research is a virtue, related to Bernard Baruch. I mean, I think that's powerful. Research is a virtue. Focus on the best of the best, but study. I'm going to continue on here. When selling stocks, would many times sell his shares as prices were rising. I'm going to say that again. Bernard Baruch, one of the best investors of all times. When selling stocks, Baruch would many times sell his shares as the prices were rising. What do we talk about at Mission Winners? Sell some into strength. And a lot of that has to do with the elimination of the uptick rule. And if you don't know what that is, ask me and I'll tell you. Most people don't know about the uptick rule. All right? Yeah, I was a broker and I was an investments advisor. I had to know all those different things. Let's continue onward. Gerald Loeb. Here we go. To trade successfully, Loeb knew one must focus on price and volume action as key determining factors. I'm going to say that again. Gerald Loeb, one of the best investors of all time. To trade successfully, Loeb knew that one must focus on price and volume action as key determining factors. Key determining factors. Folks, that's powerful knowledge to know. The money and success by concentrating on a few leaders of the day and watching their action very closely was important. That's important. Focus on the leaders, not the laggards, the leaders of the day, all right? He believed that success in trading is measured by 3 dimensions: risk, reward, consistency. Gerald Loeb. He believed you should buy only quality stocks if the trend is up, and you should limit your buys on the leaders to the strongest industry groups. I want to read that again, folks. I mean, this is powerful information to make you better. Oh, yes. Yeah, look, I'm not kidding. These are like college textbooks for me, and I taught on the university level. So, yeah, I'm ingrained in this. He believed you should buy only quality stocks if the trend is up, and you should limit your buys to the leaders of the strongest industry groups. That's huge. That's great to know. The best buy signal is when a stock moves up strongly on larger volume and the stock is breaking out of accumulation stages. It's breaking out of a base. That's Gerald Loeb from decades ago, and it's still relevant and applicable today. Quality, good fundamentals, liquidity, and good management. Price, based on rules presented earlier. Leading groups, okay, leading stocks, great price volume. The most important now, trend. The most important element and easier to detect than price. Trend. Trends persist. Leading groups, leading stocks. Check this out and tell me this isn't important. Right there. You see that? Key. And I'll read this to you. He thought that the dominant mover of stocks was the earnings of the company and the expectation of future earnings. He believed that this was the main mover of a stock's price from the fundamental side. Earnings. Earnings. We focus on earnings and sales. There's one here on Nicholas Darvis. Goes through. He fell into the common temptations that nearly everyone who ventures into stocks fell for. This is Nicholas Darvis talking. These are the mistakes he made. Low price stocks, tips and rumors, quality stocks that had fallen hard during the temporary drop in the market. Oh yeah, these are the ones I'm looking for. No, he learned, Nicholas Darvis learned, don't do that. Don't do that. He focused, how did he fix it, Nicholas Darvis? The capitalization of the company, the industry group the stock belongs to, the expected earnings of the company for upcoming quarters. Earnings, strength, fundamental strength, technical strength. And again, this is Nicholas Darvis. All right, we're talking a guy who knew pretty much. Oh, here's a guy. Oh, what's his name? Yeah, William J. O'Neill. He discovered that successful growth stocks usually rise between 20 to 25% and then decline to begin a new basis. That's Bill O'Neill. Continues on with. He's got a book, the model book of the greatest stock market winners that he made, and powerful information. What's he look for? These are called never fail rules. Current earnings. He wants strong earnings. All right? He discovered, quote, 3 out of the 4 of the biggest winners were growth stocks that showed 30% or greater increases in earnings per share. 3 out of the 4 of the biggest stock market winners, growth stocks, showed earnings of 30% or higher. They also had good annual earnings growth. See how you can connect the dots to put all this to work? It really helps us. Here we go. O'Neill's buying rules can be summed up as follows. Concentrate on stocks trading at least $20 per share, NASDAQ at $15 a share, with institutional support. Earnings should have increases each of the past 3 quarters. Strong earnings growth. Stocks, you ready? Here we go. Stocks should be about to make a new high in price, emerging from a sound basing pattern, and be accomplished by at least a 50% increase in volume for the day. I always talk about emission winners, leading groups, and leading stocks, and this is a phrase you've all heard me say and seen me type. Clean and simple basis. Why do we want clean and simple basis? Think about it. Be pragmatic. We want everybody to see what we see. Why? It increases the odds that they will buy also. Isn't that wonderful? I love that. Last part, strategies. Shared disciplines, and I think this is wonderful. All these traders discovered that being disciplined in their behaviors and their approach to the markets contributed to control over their emotions, which led to rational actions. Isn't that neat? We talk about clean and simple. We talk about simplicity. Calmness, cold, hard, rational thinking, and applying the rules and tactics of stock selection and good discipline in the buy and good discipline in the sells. There we go. And again, it's in this book. And I also have to tell you, I haven't reached out to John Boik and said I'm going to do a video review on his book. I haven't done any of that, okay? So, and he didn't reach out to me. This is strictly an objective, arm's length analysis of a good, very good book. Learn from their mistakes. All of them learn from their mistakes. O'Neill puts a great deal of emphasis on the fundamentals of a company. I love that. That is going to be, I'll stop right there. I don't want to go into much more with this. This book's worth your time. This book's worth your money. This book will make you more money. I wanted to share that with you. This is a book that's helped me through the years. And yes, I've read it. Again, take a look. I've read it a lot of times. I mean, I mark up the page. Look, I don't know what page that is, but by Jove, I marked it up. And I hope it helps you. So let's recap. Focus on stocks in leading groups that have great earnings and or great sales, a new product, something special that nobody else has. Focus on stocks that come out of a clean and simple base that everybody can see. Look for those volume surges. Always control risk. Always manage the stock. In summation, great book. I encourage you to read it. I encourage you to study it. It will help you. It will help you make more money and also control risk, which can lead to making more money. Great book. Wanted to do this for you, and it's my gift to you, my holiday gift to you. I hope it helps you, and I thank you.